Is Schwab in trouble? Is bankruptcy imminent for Schwab? And should you move your money out of Schwab now? Hello, members and super savers. I hope you're having a good week. Schwab has been in the news quite a lot this year and in recent weeks, once again, with some what I would call fairly sensational stories out there about their impending bankruptcy. Many thanks to all of you who've reached out asking for clarity on this top of mind concern. And to our members specifically, we did cover some of this in our August live Q&A. And this video is the deep dive that I had promised you 2 weeks ago. So these are the 3 questions I'll be answering in today's video. Because, well, they're the questions we've been seeing a lot from our community, especially this one here. To be clear, this video is primarily for those of you who are Schwab customers, folks who have brokerage, retirement, and other accounts with Schwab. Although truth be told, there are some good nuggets in here for Schwab investors as well, meaning those of you who are considering buying or selling Schwab stock, bonds, or CDs in light of recent developments. As usual, before we start, here's our front of video disclaimer. For a detailed disclaimer, please refer to the end of this video. Let's dive in now, folks. The short answer to this is yes. Schwab is in trouble. Sort of. The first concerns about Schwab's impending bankruptcy emerged on March 9th of this year, as you can see here. That's when their share price started falling. And to be fair, the share prices of many publicly traded financial firms fell on March 9th and in subsequent weeks, as the world watched Silicon Valley Bank collapse on March 10th, then Signature Bank on March 12th, and then First Republic Bank on May 1st. That's this second dip in Schwab's share price here. And then this third dip happened on August 22nd here. That's when many of you started asking us, is Schwab in trouble? And what should you do about it? More on what happened on August 22nd later. So first, the bad news from Schwab's latest financials for the second quarter of this year, ending June 30th, 2023. This column sums up what's happening at Schwab at a high level. And this column explains what's happening in terms of Schwab's financial results. Basically, how their numbers have gotten worse year over year, and in some cases, a lot worse. Schwab customers are pulling their low-yielding bank deposits out. Bank deposit balances in client accounts plummeted 34% from $155.6 billion at the end of June 2022 to $102.7 billion at the end of June 2023. As a result of this and other losses of almost free cash, Schwab has had to pay more interest to keep existing customer deposits and to attract new sources of cash. Interest expense increased from $160 million in the second quarter of 2022 to $1.8 billion in the second quarter of 2023. That's a whopping increase of $1.6 billion in just quarterly interest expense alone over the past 12 months. I'm not even going to bother with percentage increases in this case. And this really shouldn't be a surprise, right? Think about all the Diamond NestEgg members and super savers here who, after watching our videos regularly, pull their hard-earned cash out of their measly paying bank CDs, savings accounts, and Schwab's 0.45% bank sweep in favor of higher yielding CDs, savings accounts, treasury securities, and agency bonds. Even Schwab's own CDs are currently paying 5.4% on their brokered CD platform. And in August, Schwab issued $2.3 billion of senior unsecured notes with maturity dates of 2026 and 2034 at around 1.8 percentage points over treasuries. And yes, if you're new to us, and this is where your money is still sitting at Schwab, you may want to check out our Schwab videos here so that you can get a bit more bang for your buck in the current high interest rate environment. So, while an opportunity for us super savers and super savers, rising interest rates are clearly posing a challenge to Schwab. However, not all news is bad news with rising interest rates. While Schwab has to pay out much more in interest, as we've just shown you with this increase in interest expense number, the interest income from their interest earning assets has also gone up from $2.6 billion in the second quarter of 2022 to $4 billion in the second quarter of 2023. Which means that when you net out the rise in interest expense paid out versus the rise in interest income earned, Schwab at the bottom line only earned $254 million less in this category in the second quarter of this year versus the second quarter of last year. But still, earning $254 million less in one quarter alone has put a fair dent into Schwab's profits this year. Which brings us to this third piece of bad news for Schwab: dwindling bank deposits and skyrocketing interest expense, together with the lingering question, will interest expenses keep growing at a much faster pace than interest income? All of this means Schwab is making much less money this year. Schwab's net income shrunk 28% from $1.8 billion in the second quarter of 2022 to $1.3 billion for the second quarter of 2023. Then, on August 21st and August 22nd, news came out about Schwab's next big negative whammy, which led to this latest drop in their share price that I showed you earlier, as well as to all sorts of apocalyptic headlines about their impending demise and the worrying messages that you sent our way. In a document required by the Securities and Exchange Commission and rather quietly submitted to the SEC, known as an 8K, Schwab stated that the company is planning incremental actions to streamline its operations to prepare for post-integration with TD Ameritrade. The company is currently assessing its real estate footprint and plans to close or downsize certain corporate offices. In addition, the company plans to reduce its operating costs primarily through lower headcount and professional services. The company expects to realize at least $500 million of incremental annual run rate cost savings to be achieved through these actions. All of which is a fancy, wordy way of saying Schwab needs to lay people off and close or downsize some corporate offices so that they can cut costs and stay profitable against the current headwinds. Now, don't rush just yet to log into your Schwab account and transfer all your money out to another broker. Wait until you've at least watched the next section or sections of this video to decide for yourself what to do with all the current noise on Schwab. Because as I said in the beginning of this video section, Schwab is in trouble, sort of. The question really is this normal trouble as it happens to every bank and broker once in a while? Or is it bankruptcy level trouble? Which is a great segue into our next question for today. In our minds, no. Not at the moment with the publicly available information that we have so far. I just gave you the bad news because, well, I, like our clients and our family, generally like to hear the bad news first before we get to the good news. So here's the good news about Schwab. Clients still seem to like Schwab and are sending business their way. Schwab announced 303,000 new brokerage accounts for the month of July, their 9th consecutive month of new accounts exceeding 300,000. Net new client assets grew $11.9 billion in July 2023 alone. Total client assets stood at $8.24 trillion at the end of July 2023, up 13% year over year and up 3% from the previous month. Plus, the migration of TD Ameritrade clients to Schwab accounts seems to be more or less on track. Remember, in November 2019, Schwab announced their acquisition of brokerage firm TD Ameritrade. The first half of 2024 is when Schwab expects all TD Ameritrade customers will be transitioned to Schwab. At the current time, Schwab projects that total attrition, client losses from this acquisition and transition process should stay within the 1% of combined total client assets as of the end of 2022. So all relatively positive news on this front. What's basically happening in a nutshell is that Schwab's business is still faring well fundamentally, but in the current high interest rate environment, their cost of doing business has gone up quite a bit. And this cost of doing business may continue to stay high for a while if rates continue to stay high. But if Schwab's client business continues to stay healthy and keeps growing as it has been doing, so no run on deposits like with Silicon Valley Bank, which in our mind had a different business model and different customer composition, so not really an apples to apples comparison with Schwab anyway. And if Schwab is indeed able to reduce their cost of doing business by carrying through with the likes of this recently reported $500 million cost reduction program, and perhaps even more cost-cutting efforts should we hit harder times in the coming months, then we believe that the existing reports of imminent bankruptcy are more than overblown. Now, despite the fact that we do not feel that bankruptcy is imminent for Schwab at the moment, given that there is a lot of uncertainty in our current environment, which means also a lot of uncertainty for Schwab, let's hurry along to what's probably your ultimate top of mind question for this video. Many of you here know that I've been with Fidelity for nearly 3 decades. I have accounts with a few other leading brokers, but Fidelity is our go-to brokerage company. As I discussed with our members 2 weeks ago in our live member Q&A session, if I were a longtime Schwab customer, like I'm a longtime Fidelity customer, I'm not a longtime Schwab customer, but if I were, and based on the publicly available data on Schwab, plus our personal experience with Schwab from all the money market, treasury, and other fixed income tutorials we've done on this channel, I personally would not move my money out of Schwab at the current time. Schwab's client franchise is still growing, as we've shown here, and Schwab's problems of dwindling bank deposits, skyrocketing interest expense, and lower profitability, well, they're happening throughout the financial industry, and with banks in particular at the moment. Especially those banks which have gotten used to paying their customers next to nothing on their cash over the past decades, because super savers and super savers like us now know that we can and should pull out our lower yielding cash and redivert that cash elsewhere. And we've seen that we can get higher yields, and in some cases, significantly higher yields, even if we stay quite conservative with our investments. But back to Schwab. The key, as I see it, is that Schwab's fundamental client franchise and business are still solid. Think about it like this. Imagine that your monthly salary or pension check grows every month, and you expect it to keep growing at a decent rate. But your monthly expenses suddenly skyrocketed in the past year, and they skyrocketed way faster than the rate that your monthly salary or pension has been growing at. And you planned poorly for these skyrocketing expenses. What do you do then if you don't want to dip into your emergency cash? You have to cut your expenses, especially if you know times are bad and don't know when those times will be getting better. And that's what Schwab has announced that they will be doing. Plus, Schwab has clearly started managing their cash position more proactively against the challenges from a rising interest rate environment. At the end of June 2022, Schwab had almost $65 billion in cash and cash equivalents on its balance sheet. By the end of 2022, 6 months later, this position had shrunk to only $40 billion, a decrease of almost 38%, and probably one of the reasons many observers got a bit nervous about Schwab at the beginning of this year. At the end of June 2023, however, cash and cash equivalents on Schwab's balance sheet appear to have started growing again to almost $48 billion. Clearly at a cost in terms of higher interest expense, as we've explained before, but nonetheless good news and another reason to think that Schwab is taking proactive steps to stabilize its financials, and why we feel the current headlines about their impending demise are a bit overblown. Of course, it might make sense for Schwab to explain their cost-cutting efforts to customers and investors publicly in detail, like how I just explained this to you, assuming that's how they see it as well, either via a conference call, which they used to do when earnings were announced, but which they stopped doing after the banking blowups happened earlier this year. or at the very least via an official press release on their website, rather than simply reporting a $500 million cost reduction program via their required by law SEC filings with these two rather cryptic paragraphs that I showed you earlier. Being careful about your communications is one thing. Being cryptic is another. It leaves too much to the imagination, as we've seen from some of the harrowing media reports that have surfaced that some of you have sent our way on Schwab recently. Now, while we're not overly concerned at this point in time, things can and have changed quickly in the past 2 years in the financial markets, as we've seen with inflation, interest rates, and unemployment. So we'll continue to watch Schwab and this space. If this is something that you want to continue watching with us and getting regular updates on, then drop a comment below and let us know. In the meantime, I hope that this video has answered your most pressing questions on what's happening with Schwab at the moment, and that it's helped you see the forest for the trees. As I always say though, everyone's financial journey is different. If you're still worried about what happens to your investments if Schwab were to go bankrupt, then check out this popular video on SIPC protection that we posted earlier this year for your Schwab brokerage accounts, and this one here on FDIC protection for your Schwab bank accounts. And as always, if you enjoyed this video and learned something new, I'd love to invite you to continue to support our channel through membership so that we can keep producing one-of-a-kind, unbiased, sponsorship-free videos for our super saving community. Get your questions answered in our next live member Q&A on September 22nd at 5:30 p.m. Eastern Time. And check out our latest member videos. To learn more about Diamond NestEgg membership, visit our channel page or the joint link in the video description below for more details. All right, members and super savers, if you have other Schwab folks in your life that you care about, remember to share this video with them so that they can keep staying as financially savvy as you are. And of course, hit that thumbs up and see you again very soon with more brand new wealth building content for your financial journey.